What's up, guys? I'm Mike from Stocked Up, and welcome back to the Stocks with Mike and Tom show. We have a lot of news that came out over the weekend, some pretty interesting news that we're going to be covering in this episode. We have a lot of plays to go over that we are watching for this week, and at the end of the video, we have a $9 million option that we are eyeing out on Apple for this week. So there's a lot of interesting stuff that we're going over in this video. Make sure you stick around to the end. We have a lot of plays that we're watching for this week, and we have a lot of interesting news that we're going to be covering. So if you guys aren't subscribed already, don't forget to subscribe to see our daily videos on our YouTube homepage every single day. But let's get right into it. So Tom, what happened over the weekend?
Yeah, there was a few really interesting articles that came out, and MarketWatch reports that Wall Street's 5 biggest stocks by value are on track for their worst month ever. And these 5 stocks are going to be Facebook, Amazon, Apple, Microsoft, and Google. And these stocks are on track for their steepest monthly fall on record, according to Dow Jones market data. And keep in mind that this fall is done by an approximate dollar value on that drop. It's not going to be the percentage the stock came down or the percentage the company's actually fallen. But the approximate number is $817 billion of market value has been lost by this quintuplet of heavyweight stocks so far this September. And the closest other one was around $400 million at the drop during the end of 2018. And that was the next closest drop to this $817 billion drop. But just keep in mind that with a stock like Apple, even though that that these 4 stocks have dropped 817 billion, Apple's gained 900 billion since the coronavirus lows in March.
True. So yeah, just the main thing to keep in mind is that we're not talking about a percentage drop, but so far this month, tech stocks really took a beating, and that's what we were really expecting because they were just going up and up and up, especially stocks like Apple and Tesla with the split run too. So tech stocks have just been exploding this year. Almost all tech stocks really passed their highs in February. They're really past those highs right now. So tech stocks are exploding, and they really started to pull back this month. And I guess the big question is, are we going to see stocks continue to fall, or is this just a little pullback and are we going to continue higher? So we'll dive deeper into that topic later in the episode. But what else is relevant with this news, Tom?
Yeah, the chief U.S. economist at Oxford Economics said that he routinely comes across people who think the economy is out of the woods, given that the unemployment rate dropped to 8.4% and the peak was at 15%. And Dayco is his name, and he says that the September jobs report from the U.S. Labor Department due this Friday will signal the economy is entering a critical phase with less assistance from the government and a number of uncertainty from the November elections, the coronavirus pandemic, and the uncertain financial markets. He's just saying that all this stuff adding up right now is going to pretty much put a big strain on the economy. And, if we look at these daily charts, like with the Dow Jones and the SPY, you can see from where they peaked the past couple of weeks, it's a pretty steep drop from where they are. Like he's saying, this is a pretty steep drop in the economy overall. And even though that the unemployment rate dropped to 8.4%, there's still a lot of people who are out of work who just cannot find jobs right now.
True. We see the stock market booming since the lows back in March and even the highs back in February, but the stock market does not equal the economy. It's not like, people are just flourishing right now. There's still a lot of people struggling, still a lot of people out of work, a lot of small businesses still struggling. I know bank stocks are in a weird situation, and that's why you don't see too many bank stocks soaring right now. Like you look at JP Morgan, it's not at the lows back in March, but it definitely hasn't recovered. Bank of America, Goldman Sachs, that one popped up a little bit more, but bank stocks are still a little weird right now, to say the least. And the economy itself has not fully recovered from the pandemic yet, even though a lot of stock prices are soaring. So just keep that in mind. And I think that the elections coming up are just going to have a huge impact on the nature of the market until the election happens. So when I say that, basically what I mean is for the past 4 to 5 months, we've just been seeing the stock market skyrocket, right? It's been pretty much doing nothing but go up. And since September, we started to see the opposite. I mean, we saw a lot of choppiness and the market started to fall. But what I'm seeing as of right now is I think we're going to have a lot of choppiness until the election because there's just a lot of uncertainties. And this is a pretty big catalyst. And like I said, the economy is not fully recovered like the stock market is. You know what I mean? So I'm just seeing a lot of volatility, a lot of weird, choppy movement until the election happens. What do you think?
Yeah, me too. I just cannot, the stock market hates uncertainty, and we've been saying that for years. And whenever there's any level of uncertainty, like with the election, they don't know who's going to win. They're pretty much in the reports, they're pretty much neck and neck right now. So there's not really any sways one way or the other being reported by the news anyways. And I think that's even worse because at least if, one guy's up, by 15%, you could kind of expect who's going to win, but whenever they have it neck and neck, it really makes it more uncertain. And man, just the market just hates uncertainty. And I think we're seeing that, over the past couple of weeks too.
True, and that's just going to bring the weird, choppy market that we saw last week. So, what else happened over the weekend?
Yeah, CNBC goes ahead and reports that hydrogen is at a tipping point with an $11 trillion market set to explode, says Bank of America. And they said that hydrogen could supply our energy needs, fuel our cars, heat our homes, and help to fight climate change, the firm said in a recent note to clients. We believe we are reaching the point of harnessing the element that compromises 90% of the universe effectively and economically. So that's awesome to hear that hydrogen is going to be making huge strides forward. And there is some actually pretty cheap stocks, that could help whenever that could go up whenever the hydrogen market booms. And the first one's going to be PLUG or Plug. And this stock on a daily chart has done very well over the past few years. And really with the advancements in hydrogen, it's pretty obvious to see why this stock would go from $2 to $12 a share. But I think over the long term, there's a lot more growth still in this stock.
Yeah, so hydrogen in my opinion is I'm not watching it too much, but I just have my eye on it, just in the background. Um, like Tom said, there are a couple stocks that would really benefit if the hydrogen industry does explode. One of them being Plug, like Tom said, another one being BE, which is Bloom Energy. We have another one, BLDP, and then we have FCEL. So those are some stocks that we are just eyeing in the background for the hydrogen industry. It's not like these stocks. It's not like we're saying these stocks are gonna, just explode this year. But looking at since the hydrogen industry it's doing good, and it has a lot of potential. We're just eyeing these stocks in the background.
Yeah, and really keep in mind that Bank of America is targeting this to be an $11 trillion market by around 2030 or 2040. So just keep in mind that's a long ways away. And just keep in mind that with stocks like FCEL or Fuel Cell, they did actually reverse split a little while ago. So, with these stocks, you have to be really careful with them. But if the market starts exploding, then these stocks will do pretty well too. And I think if you have a pretty diverse portfolio, it wouldn't hurt to maybe add, this in for a couple percentages of that.
Yeah. Yep. So now for our Discord member of the day, and today's Discord member of the day is PK Melly. So I probably pronounced that wrong, but huge shout out to her for always
PK Melee.
Yeah, Melee. So huge shout out to her for being a great Discord member. I know she was taking a lot of the day trades in the Discord, Tom, in the day trading channel. I know she was doing very well with those. She was posting her profits. I know she's been doing very well with those. So
Is she the one who posted $600 on Peloton?
yeah, $600 on Peloton, and I know she had a couple more actually too. And then she had another $400 on Boeing. So great job with that. Yeah, so she made 640 off of Peloton and 360 off of Boeing so about $1,000 overall. So huge shout out to you. Thank you for all your positivity. And if you guys want to trade those same day trades, you can click the first link in the description down below for the Discord group. We have about 10,000 people in there talking stocks, options, and finance every single day. And the day trades are completely free. So Tom and I post them about 15 minutes before market open in the day trading channel, and they're completely free. So now for our momentum plays for tomorrow, and the first one is TDOC. So this stock had a pretty good day on Friday, up over 7%, closing near its highs. What levels should we be watching?
Yeah, just make it pop above that $220 level.
Awesome. So if it breaks above there, we are eyeing it to the upside. The next play we have NCLH.
NCLH. This is always a crazy stock. Make it pop above 16, or just make it pop above that $17 level, given that we're getting really close to that 1,000 SMA.
Yeah, and like Tom said, he said it's a crazy stock, but sometimes with these cruise lines, you'll see a 13% day up, and then sometimes you'll see like a 20% day down the next day. But sometimes it just goes on these runs where you could see NCLH double in a matter of a week. So it
Yeah,
doesn't.
and there's a ton of room for it to run too. I mean, it had highs of 55, and now we're sitting at 16, so there's definitely room.
Yeah, I mean, it doesn't happen all the time, but like when these cruise lines run, like they normally run for a couple days. So just have your eye on NCLH and just the cruise lines in general, like even CCL. They had a pretty good day on Friday too. And with the next play, we have Boeing potentially to the upside. What levels should we be watching?
Yeah, I'd make this one pop above 158.75.
Awesome. Yeah. So Boeing had a pretty good day today too, and Boeing's kind of the same way. When it runs, it usually runs for a couple days, and it usually runs pretty big. So now for our $9 million options trade for tomorrow, we are looking at the Apple 115 strike call options that expire this Friday, October 2nd. So we're already getting into October. Apple's looking pretty good, but I know that the market is still a little weary. It's a little weird right now. We're probably gonna have a crazy market until the election, but as of right now, Apple looks pretty good to the upside. The options are only about $3 out of the money, not even $3 out of the money, and it looks pretty good. Like I don't love this setup, but I think it's a pretty good setup as of right now. But keep in mind, futures did not open yet. So like if futures open up and they start tanking, then obviously it wouldn't be a good play. All right. So what do you think of Apple?
Yeah, I think Apple could do really well this week. I think there's a pretty good support at around 113, which is where it hit last Tuesday morning, and then ended up going down from there. I think if they could break that support, or that resistance anyways, around 113, I think it could end up going up. And, also given that that's a resistance, it's also the 1,000 SMA is at that same exact level. So it's just almost like two levels that, you could watch for it to break. And I think if it breaks this, it could be a pretty good run, maybe up to like 116 on Monday at a pretty, reasonable target.
Awesome. So now for our comments from the previous episode, and we have E-Money saying got wrecked on Rite Aid and Costco earnings, even though they both had incredible earnings. So if we look at Rite Aid, which is ticker symbol RAD, they did have good earnings, but they tanked, right? And if we even look at Costco, they did have good earnings, but they also fell. And I'm sure a lot of people are like, how can a stock have great earnings but still fall? Like it doesn't make sense, right? And I know it sounds weird, but this actually happens a lot. So stocks will report, great earnings but still fall, and there's a variety of reasons for this. One of them being like if they give bad guidance, or like sometimes there's not even a reason. As funny as it sounds, but that's just another reason why I do not play earnings plays. Everyone always asks me like, Mike, what do you think about Tesla earnings? What do you think about Costco earnings? What do you think about Nike earnings, right? And I just hate playing earnings plays because, yes, sometimes you see a stock like Nike where they just explode on earnings. But a lot of times you just see a lot of illogical things happen around earnings. Like, for example, we had Rite Aid on their last earnings. They reported a loss of, a loss of 4 cents per share, right? On their most recent earnings, they posted a profit or earnings per share of 25 cents, and they were only expecting an earnings per share of 10 cents. So they reported good earnings, and I know that there were other good numbers too, but they still fell. So I just don't like playing earnings. And another reason is like, let's say let's say somehow you predict the direction correctly on earnings, right? And then like let's say you went for puts on RAD, and even though RAD fell, you could still lose money on the puts due to the options pricing because before earnings, implied volatility runs up, and it's kind of complicated, but pretty much IV runs up, options get super expensive, and they expect a move. So, like for example, this is just a random example. Let's say they're expecting a 15% move to the upside or the downside. Let's say you get puts on RAD and it only falls 5%. Even though it fell, you would still lose money. So I made a couple of videos on this on options pricing and market maker expectations. You could just search it on the channel if you want to learn more about that. But it's just another reason I hate playing earnings.
Yeah, earnings are really tough, and it's always fun in games, whenever you get into an earnings play and it goes well for you, like Nike could have for a lot of people. If people would have gotten into Nike, they probably could have got Nike calls and they would have went up pretty well on that earnings move. But it's all fun and games until it goes wrong, because whenever the earnings go bad, they normally go pretty bad. Like if they go against you, you'll wake up in the morning down, 70 to almost 100% in some given circumstance.
Yeah, true. With the next comment, we have Chow saying, thanks, guys. What do you think of BSET? All right, let's take a look. BSET. Well,
Bassett Furniture. I'm not too sure.
I've never heard of this one, and the chart doesn't look too good, especially on. Let me pull up a
At least they've done well over the past year, but long term, it looks like they've been going down for the past few years.
I do not like this for the long term. I've never even heard of this company, but just looking at their chart, I mean, it's just something I would never buy into. I mean, what do you think about this just from a technical standpoint?
Yeah, I mean, from a technical standpoint, it looks like it's done pretty well over the past 6 months, and it's almost sitting right at a resistance around 14.50 or around $15. I see a pretty good resistance around there, so I'm not sure if it's going to break that, but with the momentum it's had, it easily could. But here's another weird earnings circumstances here. They had terrible earnings, negative $2, per share on these earnings, and then all they do is go up over the next couple months. So that's just another weird earnings scenario there even.
Yep. So with the next comments, we had Max, Brandon, and French all leaving great comments just for the YouTube algorithm. So thank you guys. And with the last comment, we had LXR saying the last time you guys reported on a $55 million option on Tesla, it ripped up. Let's see how this one plays out. So he was referring to the $55 million option on Thursday last week. So Thursday night, we were covering $55 million call options on Tesla. And then the next day on Friday, they ended up popping up. So that play ended up working pretty good, Tom. I think it was like the 400 strike calls.
Yeah, I was actually looking at them that day, and they ended up going up around 30% at the high, I thought.
Oh, really? Yeah, I mean, I'm actually going to pull them up right now. I believe they were the 400 strike call options, but Tesla is just one of those crazy stocks. So let me go to the 28th. Oops, where is it? Let's see, 20. All right. Yeah. So Tesla had a pretty good day on Friday. So that was good. I mean, I think the overall market right now is just going to be very volatile and weird until these elections happen. So,
yeah, for sure. There's a ton of stuff coming up with the elections, coming up with the stimulus bill, coming up with just the end of the year coming in general. Normally whenever the market crashes, it crashes. October's a pretty bad month for crashes. We're coming up to October. I believe the big crash of 1987 happened in October, and the crash in the 30s happened in October too, the Great Depression. So, that leaves a lot of volatility for October. And, heading into elections, I could see why, the market why October would be the most volatile month.
Yeah. So with that being said, do you have any last minute stocks, options, or anything you are watching for this week?
Yeah, the last thing I wanted to go ahead and hint on for members was that this week, I know we've seen a lot of red in the markets lately, but since we have this big red ever since, the peak up there on the SPY or on the S&P 500 futures around 35.87, now we're sitting around, 32.26 or around 3,300 even. But right around those levels, I could honestly see the stock market potentially popping back up this week. And I'm not saying it's going to, fly back up to the top. I'm just saying I think we could see a few more green bars, and potentially the SPY could come back up to 3,400, or I mean the S&P 500 could come up to $3,400. And, I could see that just because of how much the markets went down over the past month. It's been a pretty bad month this far, and, we're heading into October, and I think that we could see a couple green bars. We're bouncing off the 100 SMA on a daily chart right now too. So, with that, being at that support around the $3,200 level, hitting that 100 SMA, and we had those 2 green days on Friday, and we ended Friday and we stayed green. So that's another pretty good sign for me. So I think, to start this week, I think that we might see a couple green days to start off the week with the market. But, just keep in mind, it's a very crazy market right now. I'm not trying to predict, any ways, that we're going to fly any which way. But, I'm saying this because a lot of investors might be looking to buy puts right now. And, just keep in mind that even though the market's red, it was pretty red. So we might have a couple green days, to start the week and then go ahead and fall again, to end the week maybe.
Awesome. Thank you for sharing that. And a lot of it depends on news too. So like if some, crazy news article comes out on the economy or the jobs report or, any black swan event, that can
a big jobs report coming this Friday. So
true. Yeah. So like news can definitely affect the market in an instant. So keep that in mind. And with that being said, thank you guys so much for watching this video to the end. Tom and I really appreciate all the support you guys have been giving to the channel. We're just under 30,000 subscribers. So if you guys aren't subscribed already, don't forget to subscribe to see our daily videos on your YouTube homepage every single day. And huge shout out to everyone who's been commenting in the comments down below. It really helps grow the channel, and the channel has been doing pretty well lately. So thank you guys so much for the comments. It really helps us. Thank you for hitting that like button and subscribing. We really appreciate it. If you guys want to try out the new options day trading bot, you can click the Stocked Up Options Alerts link in the description down below. But if you have any questions, let us know in the comments down below. Other than that, thanks for watching.